They're saying they've lost about $50 million in the most recent quarter. We're either first or we're second, but we're not third. You're seeing them say, I'm not going to continue to invest in other bets. And instead, I'm going to take that capital and double down on the markets I'm number one or number two in for my core business, which is ride sharing. Dara is under pressure. Would he be making this decision if we weren't in the middle of a pandemic? Maybe not.
Uber is selling their stake in Uber Freight to this private equity firm, Greenbriar Equity. $500 million funding round from Greenbriar Equity. Greenbriar Equity brings in cash as the ride-hailing parent copes with faltering core business. It actually sums it up pretty nicely. The new investors are coming in through what Uber Freight says is a Series A preferred stock financing. The investment values the business at $3.3 billion. Transaction would provide Uber with an infusion of capital as the company pushes to cut costs and completed a $2.65 billion all-stock deal to acquire Postmates that hasn't officially closed yet, but we've covered that. That was an all-stock deal. So again, we've already seen a lot of how Uber, Dara, CEO of Uber, has made it very clear we're either first or we're second, but we're not third. Hence the name of the show. This guy, the other way, this guy gets the show. There is no third place in marketplace war. It's only first or second. And sometimes second can be a distant second. We've seen Uber exit markets where they are third or possibly fourth. And we've seen them double down in markets where they are one or two and try to accelerate consolidation. What we're seeing with this Uber Freight deal is this was a side business, kind of an other bets. I think in their earnings, they literally call it other bets when they break out the revenue and the GMV. This is an other bets business, which, if you look at this, though, when you say $3.3 billion valuation, did the money that Uber put into Uber Freight create a positive ROI? Absolutely. Absolutely it did. They've been losing money and having to invest in Uber Freight, but it certainly was not to the tune of over $2 billion to get the business to where it is today. Here, most recently, they're saying they've lost about $50 million in the most recent quarter. And it was roughly a $50 million loss in the same quarter the prior year. So if they're burning a couple $100 million a year, even if the thing was around for 10 years and they're burning $200 million a year, you actually still made money on the business, technically. So, and we'll see if the valuation holds and all these things, but I think Uber Freight hasn't been able to achieve that breakout scale. It has done well relatively. It has certainly gained traction. There's an argument to be made for how much of that did they just kind of buy the market. Truckers would receive payments normally like net 30 or net 60. And if you receive your payment net 30, that could actually mean you're technically getting it net 60 because, you complete the job, you're the trucker. Now, you drive for like a 3PL. The 3PL needs to get paid from their customer, the shipper. And then they, start the clock on the driver. And one of the biggest gripes for drivers was just, I want my money. And so one of the things Uber did was say, we'll pay you in 7 days. It's not a platform innovation. That's just a compelling linear service offering, right? Just financing the receivables faster. And if the shipper stiffs me, Uber Freight, the bill, well, you're not going to feel that pain, driver. And they'll take responsibility for it. So they tried to do a lot of things to kind of help provide a better app experience, right? It's seamless. Here's the ride. Here's the money. Bam, click accept. You're on your way. You get paid in 7 days, stuff like that. I think that the challenge or the market dynamics in trucking are very different than ride sharing, right? Ride sharing, you created a bunch of new supply, and marketplaces do very well when there is a lot of fragmented supply. Trucking doesn't have that luxury. Actually, there's a driver shortage, and you can't just go and let anyone become a truck driver. You need to have a CDL, a commercial driver's license. Oh, and you need a truck. You need a rig. Those things are kind of expensive. So it's not the same dynamics. Just be like, hey, just go jump in your car and start driving people around. like you can for Uber or Lyft or whatever. So the supply is more constrained, which what we've said on the show here is the thesis. What you really need to do, and we're starting to see some companies do this, albeit a little slowly, is to embrace a three-sided marketplace model. There are these things called 3PLs. There's tens of thousands of 3PLs. There's drivers and there's shippers. It's a more laborious way to get to, and a little bit more painful way to get to critical mass. But a lot of these 3PLs that are competitive to Uber Freight, which is two-sided, shipper and driver, and is competitive to what the big 3PL and trucking companies like a JB Hunt and others, DB Schenker and others are doing. Uber Freight, these other digital freight providers are investing hundreds of millions of dollars in their digital tools and services. These smaller mom and pop 3PLs, they can't do that. So whoever decides to commoditize the complement, whoever decides to say, I'm going to give all these 3PLs a bunch of free tools. I am going to enable my harshest competitors, smaller mom and pop 3PLs, and give them free tools. We'll be able to build a three-sided marketplace, right? Those 3PLs have their own network of drivers. They'll use these tools. They'll bring their drivers onto your tools, and then you'll be able to connect them to demand. But the 3PLs will also be able to use the tools with their own shippers, their own demand that they bring to the table. Three-sided marketplace, not as sexy, much longer path to monetize, not something that Dara and Uber Freight people want to hear. They're heads down. They're committed to the two-sided marketplace business model. I think it's too late for them to kind of re-engineer the business model and embrace a three-sided marketplace. But I think ultimately you're just going to kind of see the stagnation. I mean, these guys aren't achieving 30, 40% market share anytime soon. And I don't think they're going to achieve it with the current business model. Anyway, I digress. Long story short, you're seeing them say, I'm not going to continue to invest in other bets. And instead, I'm going to take that capital and double down on the markets I'm number one or number two in for my core business, which is ride sharing. And that is what we're seeing here, or we might see here. Uberway's purchase of BMW and Daimler's ride-hailing venture. They changed the name on this. I guess it's called Free Now. It used to operate as My Taxi. Now it's called Free Now. So it's a ride-sharing competitor in Europe. Free Now used to operate as My Taxi and has integrated ride-hailing apps, including France's Captain, Greece's Beat, and Romania's Clever Taxi. Daimler, which owns Mercedes, valued the equity investment in its half of the Your Now venture at about $720 million at the end of June. More consolidation in core markets, spending less money on other bets. Investors are going to like to see this. Dara is under pressure. Would he be making this decision if we weren't in the middle of a pandemic? Ride sharing wouldn't have tanked, 40+%. Maybe not. I don't know if we would have, frankly. Instead, I think Uber would be in a very different state than where it is today, albeit Uber Eats has really been the saving grace of Uber and just speaks to the strength of having a platform conglomerate versus a single platform business like Lyft, where their whole business is ride sharing and they're in a much more precarious position than Uber is because they have Uber Eats. So, and I think actually we're seeing Uber Eats surpass the GMV of Uber ride sharing because that's had explosive growth. Uber overall is much better differentiated due to that kind of platform conglomerate standing. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.